Forget the headlines, forget the noise you see on the news. We're going to go deeper, look at the real numbers, the smart moves that are actually shaping the Indian market. This is the real story.
Okay, so here's how we're going to break it down today. We'll start with the profit puzzle, then we'll look at some seriously smart strategic plays. After that, a quick run through a watch list of stories you just can't ignore, and we'll wrap it up with the one big takeaway you need to remember. All right, first up, the big one. How do you actually tell the difference between a company that's making real hard cash and one that's just, really good at moving money around? It's a classic trap for investors, so let's get right into it. So on one side, you've got Zerodha, a straight-up profit machine. And on the other, you have Meesho, claiming to be this cash flow king, even while it's posting massive losses. Now, these are both giants, but they are telling two completely different stories. And here's the catch. Only one of these models is really built to last. Just look at this number. That's pure profit. This is a solid, bootstrapped business. They haven't taken a single rupee from outside investors. And that's exactly why the founders, the Gamat brothers, can take home salaries of 96 crores each. Hey, when the business is all yours and it's printing cash like this, you get to do that.
But, and this is a big but, here's the number that has everyone in the market talking. The cost for them to get one new customer has absolutely skyrocketed. It used to be around 800 rupees, now it's almost 1,400. Now, if you ask me, this isn't a crisis. It's actually a predictable sign that the market is just getting more mature.
So, on paper, this looks like bad news, right? But hold on. It's a pattern I've seen play out again and again with really successful companies. This isn't a bug in their system. It's actually a feature of growth. Let me show you the playbook. Every single business eventually hits this wall. You always start by getting the easy customers, the innovators, the people who love trying new things. That part's cheap. But to get really big, you have to win over the majority. And these folks, they're the skeptics. Convincing them costs real money. Zerodha is now deep in that expensive territory. So, the crucial point here isn't that the cost is going up. The real question you have to ask is this: is the lifetime value of that customer worth the price you paid to get them? As long as the total money you make from that customer over the years is way higher than what you spent to sign them up, the business is perfectly healthy. That's the real metric you gotta watch. Okay, now let's flip the coin and look at Meesho. They're out there celebrating a positive cash flow of over 1,000 crores, while at the same time, they're reporting a massive loss of nearly 4,000 crores. I know this confuses a lot of people, but it's actually a pretty simple marketplace trick. Let me be crystal clear about this. It's simple, really. When you buy something on Meesho, you pay them instantly. But Meesho doesn't pay its vendors, the people who actually sold the product, for about 7 days. That cash, your money, just sits in their bank account. That's their positive cash flow. It's a temporary float. It's not profit. Okay, so now we've seen the difference between real profit and, let's call it, clever accounting. So let's zoom out from the balance sheets and look at the strategic moves being made on the chessboard. This is where the real long-term value is being built. Now, this Rapido and Magic Pin deal, it's brilliant. Instead of spending crores and years building a food delivery network from zero, Rapido just partners with Magic Pin to get all their restaurant listings. And in return, Rapido brings its huge fleet of delivery riders. It's a win-win for now, but I think Rapido is playing the long game here, positioning itself to eventually just squeeze out and absorb the whole network. Classic move. And while everyone's busy watching Adani's stock price go up and down, look at their real strategy. They own the airports. So what's the next logical step? They move to buy one of the country's top pilot training schools. See, they're not just buying assets, they're buying the entire pipeline. They want to control every single piece of the aviation ecosystem. All right, now it's time for a rapid-fire round. Here are the other key stories on my watch list that you absolutely need to know about. Let's go. The Byju's saga, it just keeps going, doesn't it? Well, a U.S. court has finally lost patience and ordered them to pay up $1 billion. Meanwhile, reports say the founders are in Dubai while the company's left to deal with the mess. So, what's my take? Honestly, don't hold your breath for some sudden turnaround. This is going to be a long, drawn-out fight. One side's going to say, we sent the documents. The other will say, no, you didn't. The blame game will go on and on. But the fundamental problems, they're not going anywhere. Next up, regulators are finally cracking down on crypto. You know the whole point of mandatory KYC, know your customer, was to create a paper trail and prevent exactly this kind of thing. But now the allegations are that crores are being moved through major exchanges without any tracking at all.
Look, this is a massive test for every single crypto exchange in India. The government knows the risks, and if these platforms can't prove their compliance is absolutely airtight, you can bet we're going to see some very heavy-handed government intervention very soon.
And this confirms a rumor that's been floating around the gaming community for years. If you've ever played these real money games and felt like something was off, well, you might have been right. There are now formal allegations that companies are using bots to play against you, making sure their own side always wins. It was never about your skill.
So, after all of that, what's the one crucial lesson you should walk away with? What's the real signal through all of this noise? So here's the bottom line from today. It's all about ignoring the headlines and understanding the mechanics. First, look at the quality of the profit, not just the big flashy number. Second, know the huge difference between real earnings and a temporary cash float. Third, watch the long-term strategic plays. That's where the real empires are built. And finally, never forget that the regulators are always catching up. The move fast and break things party doesn't last forever.
And this all brings us to the central question. I'll leave you with this thought. When you see Zerodha's solid fundamentals on one hand and the cash flow narrative of a company like Meesho on the other, you have to ask yourself, what really matters in the end? In a market that's just drowning in hype, are you backing a real business or are you just buying a really good story? Think about it.